Welcome back to Primary Source China Investment. Peng.guo and I are here with show I3. And today we're talking about decoupling or unwinding of globalization and what it means for companies, countries, and stocks. I'm going to put the full quote up from Secretary Blinken, but when Biden went over to Asia, talked with the Quad, and had meetings, Secretary Blinken outlined the Biden administration's long-awaited China policy. And the takeaway from that is that it looks like China and the US are beginning to converge with their trade policy. And this comes from China's commitment to this concept of dual circulation, which is something we've talked about a lot in the past, and the continuation of the Trump-era tariffs on imported China goods. And what that means for companies and eventually for investors. So I think I'll put it to you, Peng.guo, at the outset. Do you think there's some decoupling going on? And it doesn't mean it's in a negative way, but do you see that there's some, hey, China for China, US for US, or America first or China first policies?
Yeah, in the past couple of years, decoupling is happened in many areas. So we see that, but on the other side, we see like the lot of things driven by the political reason, not really by the economy sense. So that is really like the political guys put them in and try to make some change, do some adjustment and push to the decoupling area.
Yeah, we can see some of the data in the trade as well. US exports to China peaked in October of 2021. And imports from China peaked in December of 2021. So, this policy, whether it's, coming from politicians first or from businesses second or from COVID third, the reality is that trade is declining. And, these are both the two largest economies in the world. So trade is declining.
That's right. I think both countries and also prepare for the decoupling. They try to do some things and try to reduce the impact. And right now, looks like everything could be used as the weapons, but which in turn hurt everything. Whatever you use the weapon, and that will hurt that industry.
It reminds me of this swing. We swing towards globalization, we swing a little bit back towards anti-globalization. But for companies, if you look at the biggest brands or names, the biggest brands and names globally, like US companies doing business globally, they have a lot more to lose here than the biggest Chinese companies. I just give an example. Alibaba may be the best known Chinese, well, Maotai, but outside of China, maybe Alibaba is the best known China name, and it only derives 8% of its revenue outside of China, according to the annual report. Apple, perhaps the best known US name, derives 20% of their revenue just from China. So navigating this is going to be harder. And there's been some anecdotal information about Apple moving some iPad manufacturing to Vietnam. But the point here is, going forward, these companies have to have a business in China for China. And that will separate it maybe from the core of the company. So you'll have this idea of core and satellite. 100 years ago, I used to work for AIG, and AIG had that model. They had local businesses in country. They were run very locally with local people. I do feel like the pendulum's swinging back, but it's not all bad news.
That is, I think that is not really cover all the truth for the China economy, just the number, because the number just belongs to the company. And in reality, it's global, is really in a small village. So anything happened in China or the United States could impact the both countries. For example, like some of the public companies, they get some scandals in the United States. And then in China, a lot of the workers get laid off because the company's value get dropped. If you see like China recent retail numbers, so that's looks pretty bad, like the Walmart. And then which caused the entire China's economy get slows down. All the export and the trade get impact. and which return and impact a lot of the internal consumptions. And also people probably get a layoff. I see a lot of layoff news.
Well, I'm thinking about more of what the companies are going to be doing for their customer, for their client on the ground. So do you have a reason to be in China? If your reason to be in China is to serve Chinese clients, well, then you have a reason to be in China. But if you were just manufacturing in China and you don't sell locally, I don't think that's a sustainable business model anymore. Go ahead.
Yeah, I think it's except that you have a consumption, you have product that sell directly to the consumers. Yeah, most of the time they open a branch in China.
But you're competing then with local Chinese companies, and they are wildly competitive. So if you just look at Airbnb. Airbnb announced this, within the last 2 weeks, they're pulling out of China. They cannot compete. Well, maybe that makes sense. Why should Airbnb be the place to, book an apartment or a vacation stay in China? It doesn't make any sense to me. Just like, Uber got their asses kicked in China as well. So Uber had to pull out. So I do see that there's some reasoning behind all of this. It's not all political. There is some business drive behind all of this.
I think, in my understanding, foreign companies, they can participate in the entire chain. So they get many ways. Either they provide the middle product, they provide certain of the material, or they become the consumer. So they become the customer and client in the many areas in the entire supply chain. Even like the Uber. So Uber, I think they invest in the Didi, right?
Yeah.
They're the big investor in Didi. So that is the kind of ways they participate in the China local business.
Yeah,
so
just like Walmart. Walmart invested, I think, in Jingdong, maybe. I mean,
that's right. And also they have the they have the partners. So they have their own partners in China. So they compete with each other. That's obviously. And also they have the partners. And also like the local companies, they are also looking for the international partners. So they may be competitors each other. I don't know the exact relationship of them, but that is true.
Yeah, look, going up the value chain, of course, every umbrella manufacturer in Zhejiang wants to be totes, right? They want to go up the value chain because they just don't want to be the competing on cost and a race to the bottom, those kind of things. So absolutely, they want to go up the value chain. They should acquire those companies that are up the value chain. So those kind of relationships are indeed more complicated. But from an investor perspective, how I'm looking at this is I need to allocate. I'm a pension, I'm an endowment, I'm a family office. I need to allocate to China. How am I going to do that? I'm going to look at those successful Chinese companies that serve Chinese customers, because to me, that makes the most sense.
I think in my understanding, like this way, most of the investors, they just invest in the sector rather than individual company.
Yeah,
even the most experienced investors, and it's still hard to bet one company or two company could be successful. If wrong, that is probably get significant hurt. But if the entire sector could grow, they just invest in the entire sector or the top, maybe top 3 companies, top 5 companies. That's just cover all of them. If one get that done, and the other companies take the market share, so they should be getting better.
And just to keep the thread going, this sort of inverse of globalization, I don't want to say anti-globalization, those are going to affect different industries in different ways. And some of those high-flying industries like tech are going to be the most affected, probably highest volatility. So tech companies in China may have the biggest upside, but also maybe some downside risk as well, versus oil and gas or financial services, which are continue to be very well protected and dominated by a few big, maybe slow growing, but big value companies.
That's true. We can see this entire the market, each sector, they have the totally different performance. If you can be successful, really rely on your abilities, how to select the sector and rotate the sector.
Yeah, well, that's what we're here for, peng.guo. We have to think through these things.
That's true, yeah. And we can see that no matter what happened, there's always, you can find the growth sector, because you squeeze this area and another area will get a pop up.
Yeah. I mean, we talked a little bit last week about news as a lagging indicator, and I do see there is a bid in the market. There are buyers out there, so it does seem a little bit positive for the A-share market at this point.
Yeah, and finally we realize everything depends on the monetary policy and the interest rate. It looks like much more powerful than anything else.
Yeah, it seems like people are really focused on one thing. Last year was unemployment, and this year it's interest rates, and next year maybe deficit. So everybody jumps onto the next thing to really focus on. So
that's called the market theme. Each year have a different theme.
Absolutely. Well, we're going to leave it there for show I3. Thanks again for tuning in. Make sure you subscribe, and we'll see you soon.
Thank you.